Sarat, you've been relatively optimistic about the markets and have not only said stay in, but, for a while now you've been saying to buy. You're now saying that maybe is a time to hold off for a moment.
That's right, Andrew. What we're going to see now is, you've got about 40% of companies saying we can't give you guidance. And looking at where the market is, the S&P is close to an all-time high. If you look at the 5 stocks that have driven the S&P, they're trading at a 45 times PE. So the market to us seems pretty fairly valued. And really, in the short term, and we're long-term investors. I think in the short term, stay in your allocation, take some profits from some of the stocks that have become a very big part of your portfolio. I'm not saying get out of the market. Timing is going to be really hard to do, as we've seen. But I think you're going to see opportunities in especially areas that are either overvalued, so you get some fallen angels, or pick up some stocks that have been really beaten, and when they give guidance, you can get some more opportunities there. So, be cautious at this time because so much money has flowed. Go ahead.
Who do you put in the fallen angels category? Who do you put in the beaten up category?
So fallen angels, high quality companies like a Honeywell or JP Morgan, Chevron, Disney, kind of blue chips that once we get through this will come back quite strongly. What do I call them in really the beaten up? You look at some of the energy stocks, you look at some of the insurance financial stocks, and then you want to go down deeper, look at kind of some of the transportation stocks in the true value. I would wait for the true value until we get some better opportunities in terms of where earnings are going to go. But the fallen angels, those could go down even more at this point, just because we don't have any future earnings perspective. And today, the investor is looking to go to where there's growth, where the stay-at-home stocks, and those, to our mind, are getting so overvalued that you're getting into this quote kind of bucket of stocks that I would try and avoid at this point.
Right. So as we get these numbers, though, as we get earnings numbers, let's assume there's no guidance or the guidance is very wishy-washy. Thus far, it appears that investors have almost discounted all of that, that they're trying to look past all of that. You think when they actually see the numbers right in front of them, it's actually they're going to say, okay, maybe I want to sell some of this?
So I think we have to look for a couple of things, Andrew. This is going to be an interesting earnings season. One is, what are companies doing with their cash flow? Do they have the ability to go back to the capital markets and raise more cash, especially those whose earnings have been compromised? If you look at medical product companies, you look at some of the industrial companies. Are they reinvesting in their businesses? Are they looking to grow their top line? If that is the case, I want to be in these companies. If they're looking to divest and say, look, these businesses are no longer going to work for us, we're not going to have the growth rate even when we come back, those are companies I want to avoid. So you have to be really picky as you go through this, because capital markets are going to be really important. What are sales growth numbers going to look like? Margin's going to be really hard to tell, just because we know that businesses are struggling for the next couple of quarters. But indicators like that, because you also have the put. Right now, if you're an investment-grade company, you can go back to the capital markets. So I want to make sure I own companies that are going back for the right reasons, so that when we do get this vaccine, and hopefully we do, and things get better, these are companies going to have a much better trajectory and come back stronger than some of the weaker competitors. The other thing I would look for, Andrew, given that we're going into the fall, is what's going to happen in M&A. You're starting to see some more M&A. I think you're going to see more of it come down, and I think those companies that are going to be acquiring are going to be interesting because they are going to grow. And I think people are going to put a premium on growth, especially as we've seen in the last few months.